reaffirming its stance. Both sides surging order books, strong revenue CAGR above 35% and expanding margins to FY28.
And PM Modi is likely to visit the US next month for the United Nations General Assembly, and if reports are to be believed, he might meet President Donald Trump to iron out issues on trade amid a downturn in ties. The UNGA summit will be held in New York City in September.
Welcome back to ET Now. Very good morning. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankita Saxena, a show where we take all your stock-specific queries with our experts. But before that, a quick look at the markets. Ankita, it's a strong day coming today. Nifty firm above that 24,500 mark. In fact, nearly touching that 24,600 mark. And how is the rest of the market looking?
Nishka, as we speak, we are perched at 24,599, just a point away from touching those 24,600 levels. We are trading with gains of almost 100 odd points on the Nifty, so we are holding very steady. If you look at the chart also, we are holding pretty steady right now as far as Nifty is concerned. Nifty Bank, however, if you see, we are seeing a bit of a decline coming in since morning. Since the morning high, we are down actually 158 odd points from the day's high, but nonetheless, we are holding out in the green with gains of 98 odd points on Nifty Bank as well. Sectorally also we are doing pretty well. Largely all the sectors are trading in the green, barring Nifty FMCG that is trading in the red with cuts of 0.2%. Nifty Metal is the one that's shining away in fact, with Hindalco taking the lead. We also had the management of Hindalco on our channel as well. Hindalco is taking the lead with gains of 5.4 odd percent. Good set of numbers coming out of Hindalco. Besides that, we have National Aluminium, Vedanta, Jindal Steel, Hindustan Zinc. All of these counters are doing very well. In fact, the entire metal pack is trading in the green right now. Nifty Auto is another sector that is doing very well. Hero Motor, that's up in a wave, 2.5% in trade. Bharat Forge, TVS Motors, Tata Motors, they're all trading upwards of 1.5% or so. As far as the broader markets are concerned, then if you look at, if you pull up the charts for Nifty Mid Cap, Nifty Mid Cap is trading with gains of 0.6% coming in, and Nifty Small Cap is also trading with gains of 0.4%. So largely a positive day coming in, Kanishka. If you look at the advance decline ratio also, that's decisively tilted in the favor of advances. We have Apollo Hospital as the top Nifty gainer. That's surging away in trade with gains of 6.2% on the back of the results that it has posted and the commentary that's come out of Apollo Hospital. Strong set of results coming in, and on the back of that, that's the top Nifty gainer. And of course, like I mentioned, Hindalco is the second top Nifty gainer on the back of a good set of results and commentary coming in. So that's the pecking order of the gainers. But on the losing side, we have IndusInd Bank, that's down almost 1% in trade. ITC, Wipro, Nestle, Adani Ports in that pecking order are on the losing side. But besides that, we also have the new age tech companies that are in focus today. We have Paytm actually that has gotten a nod from RBI in principle to operate as online payment aggregator. On the back of that, that's up in a way 4%. Besides that, we have Nike, also a good set of numbers, inline set coming in for Nykaa for the first quarter, and we also have Honasa that has posted its quarter one numbers, largely inline coming in. So Nykaa also up 4%, and Honasa Consumers trading with gains of almost 10% in the trading session today. So all these new age tech stocks are doing very well in the trading session on the back of a strong set of results coming in there. So that's how largely the market is shaping up. Kanishka, it's a truncated week, but net a good day coming in.
Absolutely. Net, a good day coming in. But to discuss this further and take all our viewers' stock-specific queries, we are now joined by Hemin Kaparia, Technical Associate, DR Choksi FinServ, and Sharan Leelani, who's our in-house market expert. Good morning, gentlemen. Welcome to the show. Hemin, sir, let me come to you first before we get started with all the queries. Then, a day of green, then a day of red, then again today we are seeing positive moves coming in. How do you think we are going to end the week? Do you see a more decisive trend we could see when we end the week tomorrow?
A very good morning to you, Ankita, and very good morning to you, Kanishka. We've had a 1,000-point fall. A recovery was sort of overdue. We've seen 6 weeks of a downside. support has come in. We spent 3 trading sessions taking support on the 24, 347, 350 level, and now we are bouncing back. A close about 24, 700 should see some more traction coming in. So I believe we are in a recovery mode, not a rally mode, but yes, deeply oversold. A bounce is underway, and the bounce is not getting over in a hurry. So things are looking better. IT is oversold, and if FMCG is down, I think that's a good sign for the market. VIX remains at 12, which isn't too much of a worry. Uh, hey, US markets, okay, there's a distinct disconnect, but US markets at all-time highs. Things are looking better, but this is a very shorter term point of view. Okay, coming back to your main question, I think the week end should be on a positive note, and we should be probably higher than where we are today. Kanisha.
All right. So on that note, let's get started with all the questions that you've been sending in. The number is going to flash on top of your screens. Keep sending in your questions. The stock that you want to look into, the buying price, the holding period, and your question, and we'll get them answered by the experts who have now joined in. So let's begin with all your questions. Without further ado, the first question that's coming in is on PNB Housing Finances. Sudha was writing in. She wants a 2 years perspective on PNB Housing. Whether it is a good buy for the next 2 years. He may let me come to you for PNB Housing. She wants to hold it for the next 2 years. Would you be bullish on PNB Housing?
Ankita, uh, currently we are at very strong support at 750. A bounce is around the corner. But the longer term charts, okay, we're mid-month. I would have a more clear view at the end of the month. But the longer term charts seem to be in turmoil. Things are not looking that copacetic. So I would say from a 2 year point of view, currently things are not looking that great. We probably need to review this after 3 to 4 weeks. But yes, currently, if you're playing for a bounce, keep a stop loss at 740. But a 2 year buy at current levels, keeping the technical setup in mind, is not justifiable.
Okay, so that's the view on PNB Housing. But moving on, Sharon, let me come to you for this one. This is Mahalakshmi writing from Hyderabad. She has a query on the capital goods space. Now, this one is talking about ABB India. She's been accumulating shares of ABB India since January 2023. As of now, she has 93 shares and her average price is 5,560 rupees. She wants to know, should she continue to add more at this juncture, or should she wait for some more time and see some more fall coming in when she can add more?
Good morning, Kanishka. Good morning, Ankita. For ABB, I would suggest do not add anymore. The stock is quite weak, again trading below all its moving averages. But again, it's at its long-term support. If it consolidates between that 5,000 and 5,100 odd mark and starts moving up the 20-day EMA, if and when it does around that 5,200 or 5,300 odd levels, you can think about adding. But currently, I would just suggest hold on to the stock. If you want to be in the capital goods space, I think Siemens and Cummins are looking quite decent and even better than ABB. If you have the capital and want to be in the capital goods space, I think add on to Siemens or Cummins. And I think overall short-term period, you will get better returns on those counters than ABB. Since you are holding, I would suggest please put a stop loss in the system. If at any point of time the stock starts trading below that 4,900 odd mark below on a daily closing basis, I would actually suggest to exit the stock and shift to a Siemens or a Cummins. So currently hold on to your stock with a stop loss of 4,900. Please do not add any more ABB at this level.
All right, do not add ABB at this level. The chart looks weak, and besides ABB, I mean Siemens is looking attractive from that pack. But let's move on to the next counter then. Himen, let me come to you for this one. This is on LIC Housing, which has been bought at, okay, again, there's no name here. But they bought it at 613 rupees. They want to know your view. Should they be holding it or selling it? Clearly, they're sitting at a loss, Himen, and the stock hasn't even done anything in the last 6 odd months. Should they really sell out and look at a better counter, or would you still ask them to hold this?
I'd ask them to hold this, Ankita, only if there's a 15 to 18-month point of view. Like you said, it hasn't done much, doesn't look like doing anything much. But yeah, if you have a slightly longer term point of view, we are in a correction within what is a longer term move, up move. That's what I mean to say. So if you have a shorter term view, sell on bounce. If it's not, have the patience, it's worth holding on to.
All right, so must have patience, can continue to hold for the long term. But Sharon, let me come to you also for this one. LIC housing, what do you think? What are the charts suggesting in the near term? What kind of upside or downside can we expect?
Kanishka, I think in the housing space, there are much better stocks out there doing quite good. Your Aadhar, your Aptus Value, and the other players. Particularly for LIC housing, it has not done much. It's been just been consolidating between that 550 to 650 odd mark. Currently trading below all its moving averages, and I do not prefer to actually give an advice to enter these stocks or do a bottom picking on these kind of stocks, because if the market becomes weak for any reason, you can actually see much more downside levels coming in an LIC housing. It has a decent support around that 550 560 odd mark, but if it breaks that, you can quickly see that 500 odd levels also coming. So currently please avoid this counter. There are much better players in the listed space out there in the housing sector where you can look for a good investment.
All right. LIC Housing Finance is largely a no, unless there's a longer holding period, and plus the housing finance companies are looking weak right now. But let's move on to the next counter then. This question is coming in from Ravi from Vijayawada. He says he has 1,000 shares of Hero MotoCorp at 4,735 rupees. He says, what would be the targets for Diwali? Sharon, let me come to you for this. Hero Moto is, it's doing very well in today's trading session, and it is one of the counters from the auto pack that has done well. Till Diwali, what are the targets that you'll be watching out for on Hero Moto?
So Ankita, I think it's looking very good on the chart. Since the last 2 weeks, we have given a buy recommendation from 4,300 or 4,400 odd levels. And looking at the way it's moving in such a weak market, it's making higher highs. So I would suggest, if at all you have taken a trade position, I think expect targets of 5,000 to 5,200 odd levels. And it is quite possible even before Diwali, it can achieve these targets. Again, festive season is just around the corner, so expect some kind of launches and better two-wheeler numbers, especially in the EV side. So quite positive on the stock. If you're holding, hold on for targets of 5,000 to 5,200.
All right, so quite positive on Hero MotoCorp. But Hemant sir, your view on the whole auto sector, what would your preferred picks be from the auto pack?
If you look at the Nifty auto index, Kanishka, I think extremely fascinating. Spent 13 weeks doing nothing. Now it's setting the stage for an upward breakout. My pick would be Maruti, but it's not a very shorter term view. Why not shorter term? Because it spent 17 months doing nothing. It's setting the stage for a big breakout. Once again, the breakout hasn't occurred yet. One would not anticipate a breakout in a market like this, but assuming the breakout comes in about 13,060 and 13,500, there's a big range. I think we could be looking at 15,000 and more. So if there's a breakout coming under 17 months, it's going to be a very good move. So not a short-term view, but if you have once again a slightly longer-term view, Maruti stands out. But yes, the breakout hasn't come in yet.
So that's the view coming in on Maruti by Hemant. But Sharon, let me also come to you for Maruti, because Maruti has been one of your top picks. Take us through to the reason why you see you have a bullish call in Maruti.
So Ankita, I think today only it was my top pick. It's on a shorter term frame. It's given a breakout of a descending trend line pattern. And looking at the way it's moving, as Sir said, it has been doing nothing and just consolidating in a range. So it's given a breakout. So I expect it to move quite high around the 13,200 to 13,500 mark, which has a small resistance around about that level. As I've said, festive season is around the corner, so expect couple of launches. Like today only in the news, I think September 3rd, they are launching a new SUV. Definitely SUVs are faring much better than the other categories, so expect some kind of more upside on fundamental as well. Technically, it's looking very good for that 1300 200 to 13,500 odd levels.
All right, so positive call coming for Maruti Suzuki, both on the fundamentals and technical side. But on that note, we'll take a very short break. Be right back with more of your queries to be answered on the other side.
Welcome back. You tune in to Buy Now Sell Now with me, Ankita Saxena, and with me is Kanishka Sarkar. And we are getting all your stock-related questions answered by experts. The number is flashing on top of the screen, and you can keep sending them your questions, and we'll get them answered. Let's resume with all the stock-related questions. Then let me come to you for a festive season question. Then this one's coming from Drishti from UAE. She says that she wants some advice on festive stocks as the festive season is approaching. Himen, let me come to you for this one. We are starting with, of course, our Independence Day, then we have Ganpati, and we have gotten into a festive season. So there is a lot of festive cheer around, and people want to know what would be a festive picks. I'll take it from both of you. First, Himen, I'll come to you.
Well, I'm not too enamored by the Swiggy, Zomato, and the Nykaa, despite Nykaa's good numbers. I would be slightly more traditional. I would go on for something like an Hindalco. Good numbers yesterday. Breakout is coming in. Consolidation, very nice. So though it's not a traditional festive stock, but as long as you make money, I think that's festivity. So I think this stock Hindalco looks nice. Hero Motocorp has given a breakout, so that should continue. That looks good, and even DMart looks interesting. So these few stocks would be festive picks, not exactly festive, but yeah, money making picks.
All right, so those are some of the festive picks that Hemant sir has suggested. But Sharan, now let me come to you. You've already spoken about Hero Motocorp and Maruti from the auto space, but from other sector, which are going to be your festive picks for the short term?
So Kanishka, I think looking at the festivities, I think people do a lot of shopping, especially clothes. So I think Trent is on my radar for Studio or maybe other one. I think it has made a good recovery from the bottom levels, though it is not trading above the 200-day. But I think it is at good levels to do a buy on dips and accumulation. I think in the festive season, people will have more money because of the tax cut and the interest rates are down. So you can use more EMIs also. So Trent is on my radar. The company is doing exceptionally well, 25% kind of growth. Fundamentally, though slightly overvalued, but I think long-term outlook is still intact. So expect some kind of upside, especially above that 5,600 odd levels. If at all you have to accumulate, I think this is a good level to start accumulating. And if it starts moving above that 5,600 odd mark, you can quickly see that 6,200 odd levels. So till Diwali, I think trend should be on your radar. It's looking quite good on the charts at the moment.
All right, so one traditional stock, Hindalco, and the other one festive season stock like a Trent to keep on your radar till Diwali. But let me come to you for the next question. This one's coming from Praveen from Chennai, who wants your view on the power stocks, PFC, REC. Is it a good time to average for long term, or you suggest a sell call? He's bought it at 2024 peak is when he's bought PFC and REC. Himen, let me come to you for your take on the power stocks and PFC and REC. What should Praveen do with these counters?
Hold on if there's a 2-year outlook. One needs to keep in mind that if a stock goes from 80 to 580 in 2-3 years, laws of gravity will catch up. A deeper time price retracement will be around the corner. So give it a break. That's what is happening. Once again, if you're a 2-year point of view, hold or add more at 360. Before that, I'd be pleasantly surprised if it does anything positive. Longer term outlook remains technically positive.
All right, so the longer term outlook remains positive. But Sharan, now let me come to you. What are the charts suggesting? What kind of upside or downside could we see for REC and PFC in the short term?
So Kanishka, we have spoken about these stocks quite a bit. I would suggest avoid on both of them. They are not big movers. They had already had their big rally, and now they're on the correction and consolidation phase. So at this moment, both of them are clear. Avoid. If you want very minimalistic kind of return, that 5-7% kind of return, you can hold on to it. But on the charts, they are not looking any great. Shift to better industries maybe festive season is coming, so again it's better to shift to that two-wheeler pack and M&M in the four-wheeler pack, or your Trent or Titan also, in fact, and even the Nifty PSU banks. I think you will get better risk reward ratio for your money invested in these sectors rather than sticking to your REC and PFC. So for me, both are an exit. Shift to better sectors for better returns in the future.
So that's the view on the power financiers, the power stocks by Sharan and Himain both. But let me get on both the next question. This is Padma who's writing in. Padma is a senior citizen. She says, is it a good idea to buy Schneider Electric and Mazgaon Dock at current price for 1 year? Himain, Schneider Electric and Mazgaon Dock. Mazgaon Dock, are you comfortable with the valuations? It's pretty, it's an expensive stock. It is pretty stretched, but do you see more upside? Should she be getting into it for the next 1 year?
I think she should look at it only if it's a 2 year plus outlook and not at current levels. They've had humongous up moves, especially Mazgaon Dock. So we walked into a correction of a greater degree, which hasn't completely played out. So yes, 3,800 to 2,600 of 500-point bounce could be around the corner, but the bigger picture remains corrective. It will take some time for things to play out and valuations to catch up. So no, and if I were to look at Schneider, a slightly similar view in the sense we've had a beautiful move. Stock has gone up from 50 to 1,050 in the last 5 years. I don't think either quantify as a buy at current levels. On deeper declines and which are not yet visible on the horizon, how much they'll go down by. So no.
Okay. So that's the view there. But Sharan, now let me come to you. What is your view on the defense pack? We had Bharat Dynamics and HAL report their results today. It has been a good set of numbers coming for both of them. Mazgaon Dock also, so now do you see valuation comfort? Do you think these are bets to take right now in the current rates?
So Kanishka, I think so very rightly said, they have had an excellent run up. Now the geopolitical issues are totally calm all over the world, so I don't see any news impact coming on the defense sector. Since they have run up a lot, you might see some kind of correction also going ahead, and even a sideways consolidation. For at this point of time, I would suggest avoid the defense pack. Despite good news, it starts well but corrects during the day. So this is not the right time to enter these sectors. If they decline another 10 or 5 to 10%, you can think about a buy on dip strategy. If you have a view of around 3 to 5 years, defense as a story is definitely intact for the longer term, but for the shorter term, I would avoid at these levels, because in the next 3 or 6 months, you might get it at a lower level. So for me, the whole defense pack is an avoid at this point of time.
All right, so common consensus and avoid on the defense pack as the valuations are pretty stretched. They have run up quite a bit. So perhaps wait for better levels to get into the defense pack, though the longer story is intact. But let me come to the next question that's coming in from the cap good space. This is this is Krish who's writing in, I beg your pardon. And this is for Himain. Specifically, he wants to know from you. He is holding L&T 100 shares at a buying price of 3,640 rupees since January 2024. He wants to know the long-term view, or he wants to know if he should be holding on to it or should he shift to another quality stock. He meant L&T, a good set of results that L&T came out with. In fact, L&T is one of the stronger names from that particular pack. From a long-term perspective, what would be your view?
I would say hold on. I mean, you have to have some patience. Quality stock, everything right. 18, 19 months of a consolidation, but do not mistake, we are in an unequivocal uptrend. We are clearly bullish from a longer term point of view. So after 18 months, I won't be surprised if it takes another 6 months for the breakout to come in. But the breakout, as of now, looking at the technical setup, is headed on the upside. So hold, breakout comes in at 3,900. I believe 4,500 and 4,800 are two targets. Once again, keep some patience, and if you have the patience to hold, it's a hold. Otherwise, you can shift. But I would be comfortable holding a quality stock, and especially after so many months, I think a breakout is around the corner.
All right, so a quality stock for the long term. But Sharan, what do you think? After the company's result, which was a very strong Q1 for L&T, we did see the stock rallying. But do you think the run-up is perhaps slightly over now, and the stock could see a breather in the short term?
So Kanishka, I think 3-4 days back, I think it was my top pick. Has given a short-term breakout. As Sir rightly said, I think if you have to play the whole infra theme, at least for India, and I think the growth is going to be excellent in the next 2 or 3 years, L&T is the stock you have to have in your portfolio. Now again, looking at the stock, it has given a small breakout. It can retest its previous swing high levels of 3900. And as Sir rightly said, if you see a breakout above that 3900 odd level, you can quickly see that 4300, 4500 odd level. So even in the short term, the stock is looking very good to reach targets of 3900 odd levels. If it consolidates around 3900 and even gives a breakout above that, you can quickly see that 4300, 4500 kind of targets. So definitely a hold, and even if someone wants, they can buy at the current price for targets of 3900 with a stop loss of around 3600 on a daily closing basis.
All right, so L&T for the longer term perspective is a definite buy because of course the story remains intact for the longer term for L&T. But let's move on to the next question. This is Ravi Kumar who's writing in. He wants your view on Yes Bank. Yes Bank hasn't done much. In fact, in the last 1 month, it has been correcting, it's been consolidating. What is your view on Yes Bank, though he's not mentioned the time frame?
My answer to the Yes Bank question would be no. Hasn't done anything for years. Don't expect anything. It peaked at 407 years ago, and after that we've seen multiple attempts. There have been technical intermittent flashes, positives, green shoots. Up till now they've all flopped, so I don't think there's anything going for it currently. Maybe things improved somewhere down the line. Currently, no.
Okay, so that's the view on Yes Bank. But moving on, he means this query, another one for you. This is a senior citizen, Ekambaria, writing from Hyderabad. His query is on Tejas Network. He's been holding 175 shares of Tejas Networks at a price of 1,125 rupees. He's suggesting whether he should start averaging or book the loss when it comes to Tejas Network. What would your be? He wants to keep the stock for at least a period of 1 year.
A little bit of advice on the hindsight. The level he bought, I think you need to set a stop loss in place before. Okay, if you're looking at an X number of rupees on the upside, a percentage wise appreciation, at least some percentage needed to be kept as a stop loss. You would have saved some capital. Having said that, we are in a short, medium, long-term downtrend. Any time frame you see, Tejas remains technically negative. Very strong support comes in at 500. There's a whole congestion area, it's 500 and below. So 1 year time frame, I don't think is going to do good for him. If it's 2 years and more, then it's worth holding on to. Currently, I wouldn't tell him to average because it's like catching a falling knife. We need to wait for stability, consolidation, reversal, and then a up move. So right now it's not even stopping on the downside. So no advice to average at this point in time. 500 is when we need to review the situation again, whether the support level holds and it provides a requisite cushion for an upside. So 2 years or more hold, otherwise no average at current levels.
All right, so that's the view on Tejas Network. But let's move on to the next question. This is coming in from Lakshmi from Bengaluru. She says she's a long-term investor. She has 20 lakhs to invest. What are the best stocks to invest? This is my tenure is more than. She has a long tenure of almost 5 to 10 years. Can you please suggest any stocks that are risk-free? In the stock market, there's nothing called risk-free. But she wants stock suggestions for the next, say, 5-year horizon. 10 years would be too long, I guess. So from a 5 years perspective, 20 lakhs is the amount. Sharan, let me start with you.
So for such a long term, I would not be able to suggest. But again, as I've said, like the defense pack, if it corrects 5 to 10%, you can start a SIP for the next 12 months by investing around 1.52 lakhs every month. So defense as a story for the next 5 to 10 years is very strong. I think it will satisfy all your needs. But again, there is nothing such as risk-free in the stock market. You have to adjust your risk. If at all you invest, keep a stop loss of around 10% post your investment. If the stop loss hits, exit. But I think again, defense pack is looking very good for a long-term 5 to 10 year story.
Okay, so the defense pack looks a good 5 to 10 year long-term story. But Hemant sir, let me come to you. Apart from defense, what would your preferred picks be for the 5 to 10 year period?
I think CDSL, CAMS, State Bank, Geo. I think these would be my picks from a slightly longer term point of view. Yeah, 5 to 10 years.
All right, CDSL, SBI, Geo, quite a few names coming in there for the long-term perspective. But let's move on to the next question. This one's coming in from a lot of questions coming on Hindalco actually. Sharon, let me come to you for Hindalco. I think Hemant has already given his view on Hindalco. What would be your view on Hindalco?
So a very good set of results. Again, looking very good on the charts. Has a small resistance around the 700 odd levels. I think if it starts moving above 700, you can quickly see that levels of 750, 775 coming. So on the charts is looking very good. Taken a decent support of the 200-day EMA and has reversed from there. So if at all you have a position, please keep a stop loss of around 650 on a daily closing basis. If at any point of time, because of any news, geopolitical, global or any news, if it starts closing below the 650 odd level, take your stop loss and we can again review it after 3 to 6 months. But again, looking very good on the charts. You can see a breakout coming about the 700 odd mark.
All right, so Hindalco also looking good on the charts apart from fundamentals. But on that note, we'll slip into a very short break. Be right back with more of your queries to be answered on the other side. Hi there, welcome back to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankita Saxena. On to our latest update then, we bring to you a confirmed after story of the news that ET Now broke on October 7th. It seems now that the Theobroma and Chris Capital deal is now done and the PE investor acquiring almost 85% stake in the company. My colleague Anurag Joshi is now joining us with all the details here.
Private equity investor Chris Capital has acquired an about 85% equity holding in patisserie chain Theobroma. ET Now was the first to report on October 7 that Chris Capital had put a binding bid for the planned acquisition of a controlling equity stake in Theobroma. The transaction is Chris Capital's first buyout in the consumer industry. Theobroma was founded in 2004 as a single store in South Bombay's Colaba Causeway area. And this chain was founded by sisters Kenaz Mesmin and Tina Mesmin. And so from a single store in Kushrobag in Colaba Causeway, it's now grown to over 250 stores in 45 cities in the country. ICICI Venture, which had an about 42% equity stake in the company, they've completely exited this investment and they have raised close to 1,000 crores through the deal. If you see the deal value, that's about 2,400 crores. And the Mesmin family will keep a minority holding, a small minority holding after Chris Capital has taken the control of the company. ICICI Ventures had invested $20 million in Theobroma in 2017.
All right, so that's a big deal coming through. I mean, it has been going for a while now, but finally it has come through, that deal with Theobroma from the the venture and the startup space. That news flow is coming in. But let me get back to our show then. Let's start with the questions again. This is Vijay Kirti, who's writing in from Chennai. She says she's holding 1,000 shares of Bank of India that she's bought at a buying price of 121 per share. She wants to know if she should exit and invest in HDFC Bank, or what's the recommendation, or any other big banking name perhaps, you mean? Let me come to you for this one. Bank of India, or should she exit and park her money in HDFC Bank, or any other recommendation?
I'm bullish on Bank of India and HDFC Bank, but only from a longer term point of view. State Bank is also something that I like. So frankly speaking, she can hold on to Bank of India. It sounds a bit repetitive, but 40 to 155, give it some time. HDFC Bank has given a good move. I believe currently overbought heaviness on the weekly chart, correction is around the corner. But if I look at the bigger picture, both clearly HDFC Bank is stronger and better. It's not a fair comparison, but I think both can be held on or sell half of Bank of India to buy HDFC at slightly lower levels.
Okay, so that's the view on the banking space. But the next question is coming from DRK Srinivas, who's writing from Hyderabad. Let's first get a technical chart check done on this. The viewer has been holding 144 shares of LIC since the IPO. Sharan, what do you suggest? What are the charts looking like for LIC? And then Hemant sir, we'll come to you for a fundamental view.
So Kanishka, I think the whole insurance pack for the next 3 to 5 years will do extremely well. We are a very underinsured country. LIC is also entering into your health insurance. So again, a very good fundamental addition to their already good business. The stock again taken good support around the 200-day EMA of around 890, 900 and has quickly reversed from those levels. If it starts moving around about that 940 to 950 odd level, which is also a descending trend line breakout also, you can quickly see levels of that 1000 and even 1100 odd levels coming in LIC. On the charts, it's looking quite decent. Fundamentally also quite a bit of changes happening in the company. So I would suggest hold on to it for much higher levels. And I think looking at the whole insurance play for the next 3 to 5 years, it'll do very well. So even longer term view is still intact and technically also it's looking quite decent.
All right, so that's the view coming in on LIC. But moving on to the next, this is coming from Pallav Gupta. He says he owns 100 shares of Bajaj Finance. He's bought it at a buying price of 450 rupees. He says now that he is sitting at a profit, should he be holding it on for the next 1 to 2 years or should he book out? Hemant, what's your view on Bajaj Finance? He's clearly made considerable profits there. Should he book his profits or should he hold on to it? There's more upside to this.
Book to buy again later because we walked into a correction and I'd be surprised if it doesn't go down more. So sell now and buy it again later. We are in a long-term uptrend, but I think the chart structure seems to suggest sell and a buy on declines.
Okay, so that's the view on Bajaj Finance. But the next query is coming from Ratan, who's written from Chandigarh. He wants to know the view on Ola Electric. He has 1,000 shares bought at a price of 107 rupees. He wants to hold the stock for a period of 1 year. Hemant sir, what would you suggest?
I'm sorry, I'll pass. I don't track Ola.
Sharan, possible for you to give a chart check on this?
Yeah, definitely, Kanishka. I think we had done a full show on this and we had given an exit because the company's fundamentals are quite weak. Their sales have been declining and I think almost down 50%. So this is an absolute exit. There are much better two-wheeler stocks out there. Shift to a TVS motor making a new all-time high. Even a Hero MotoCorp, I think you will see good recovery or targets of 5,000 to 5,200. So you might recover some of your investments. So please exit Ola Electric. Even at current level, it is not looking very good. I think in the next 3 to 6 months, you might even see lower levels of 35, 30 odd levels coming. Fundamentally very weak, technical almost at the lowest point. So absolute exit from this counter.
Right, absolute exit from Ola Electric and perhaps look at more lucrative two-wheeler stocks like Sharan mentioned, like a Hero Moto and so on. But with that, sorry, we're completely timed out in this edition of Buy and Sell Now. Sharan and Hemant, thank you so much for taking the time out and answering all the stock-related questions. With that, it's a wrap. Kanishka and I will also take your leave. Thank you so much for tuning in.